Hey everybody, welcome to Trading Capital's daily analysis video of the major indexes, the S&P 500, the Nasdaq, gold, and Tesla, and Bitcoin as well. We'll be touching on a variety of the major indices and asset classes. I'm your head market analyst, Curtis Skelton, diving right into the charts here on April 21st, 2022. What a wild price action in the markets. We saw whipsaws, ups, downs, and ultimately, once the selling started, the selling did not stop. So let's just flip into the intraday action on the SPX, the S&P 500 here. I just use the SPX. I use the SPY for day trading, but for a lot of the analysis videos, I use the SPX just because the S&P SPY chart that I use is full of my day trading lines. It's just a complete mess, and it would complicate things because I do a lot of intraday trading, and the subscription service that I have going here is for swing trading. So you're not needing to do much intraday analysis as compared to what I do. That being said, look at this gap up today. Markets were really strong heading into, but usually when markets gap up, it's never really a good sign. You know, a gap up and then crack. The market certainly cracked. So you can notice we gapped up and then the selling just continued. And notice how we put in this little bit of a kind of a topping tail candle here. I mean, the tail's not as big, but nonetheless, it is at the highest point of this shorter term pattern. And then the selling just started. A lot of people tried playing this area as a gap fill, and it worked out. It didn't work out. It absolutely did not work out. So that's the beautiful thing about TA is you got to notice which gaps are good to play, which ones are minor, which ones are major. Not all gaps are meant to be played for a trade, but all gaps are meant to be filled at some point in time. So just because there's a gap on the chart doesn't mean that there's going to be technical support there or technical resistance. But the sell-off just continued all day long. The S&P was down 1.48%. Had a small little bit of a rally into the closing day. That could have been potentially shorts covering and some buying going on. But nonetheless, let's flip to the daily chart. When you see a reversal candle like this, it's a sign for caution, especially as we head into the big cap earnings next week. If for some reason any of those FANG stocks miss, the markets will be under immense pressure. Immense pressure. So all eyes will be on Google, Amazon, Apple, Facebook, and Microsoft. So if one of those companies miss, you can bet that they're going to drag the indices down. So notice how we are trading in and around this support level again. We have not taken out this bottoming candle here, but we're very close. Just looking at the futures right now, the S&P mini futures, we are actually down on the session by about a 0.5 percentage point, but we still have not taken out that low. It's getting very close. So if you do take out this low, and sorry, I shouldn't say if, I said when you do take out this low, it's not a matter of if, it's a matter of when, then the next level of support is ultimately going to be down here on the actual S&P 500 chart. The technical gap did not get filled. It's showing on the SPX that it did get filled here, but on the SPY chart, it did not get filled completely. So there'll be a little bit of support here. Something that we also need to keep in mind is this overall trend line here. You'll have a little bit of minor support, not major, minor support at that level. And then ultimately you'll have this area over here. And if you break this pivot low, then you're coming to test the double bottom. And the question is, will the markets hold the double bottom area, or will they let them go? I ultimately think that eventually you have to break that double bottom and come down to this gap fill down here around 400 or 4,000 on this chart. A little bit of a candle wick low there, so major pivot zone. I think this channel is going to be a good guide for us, kind of ping-ponging in between these ranges will provide lots of tradable opportunities, but nonetheless the S&P I do think is heads much lower. The Nasdaq was hit the hardest. Notice how we're just going to flip back to the S&P, throw on the 50-day moving average. Notice how you got above the 50-day moving average on the S&P and then you reversed and closed below. Well, the Nasdaq shows the relative weakness where you could not get above that 50-day moving average, and this was the chance. You have this bearish consolidation happening here. So let me just draw this in. So you have this type of bearish consolidation happening. That's a classic bear flag. And you could not get above that 50-day moving average, and you actually reversed completely off it, closing below this candle low and potentially starting to trigger the bear flag pattern here. And again, there's not much support on the Nasdaq in and around these lows. I think your big one is going to be down here for your Nasdaq, but the thing about the Nasdaq here, and with yields pushing up significantly, with inflation on the horizon, with many of the companies' forward guidance being weak, I think the big cap techs could potentially break this market if the forward guidance is weak. And the Nasdaq, what's concerning about me is you've hammered off of this bottom once, came back down to test it, hammered off of this bottom again, and you rallied. Now, every time you hammer off of a support zone, it becomes weaker. Think of this, as a piece of glass. You hit it, it's shattered. You hit it, it's shattered some more. And now you're coming down to hit it again. And the more times you hit it, the more favorable outcome that this piece of glass, aka the support zone, breaks completely and gives way. So I do ultimately think you have to come down to these lower levels. The major level that I'm watching for a big bounce and is this this 12,250 level on the Nasdaq, the NDX. I'm not too sure what would be on the QQQ, but more or less you can figure it out. Basically, it's the previous pivot high in September with the pivot low in March. That will be a big level of support in my opinion. And then your bigger one down below here with the major gap fill. One of those levels, once we hit them, it's too early to tell which one it's going to be. But one of those levels will be a major bounce where we potentially have a more sustained bounce for a longer period of time. And this is where I look at it, that on one of those major support zones, we could potentially come up and fill this gap eventually. I don't think we bounce off this and come to fill it. I think we fill that gap when we have a major bounce off one of these trend lines. People think the bear market rally's over. We'll have a tremendous bounce off the low, coming up to fill this gap, and then ultimately starting the next down leg over time. So the Nasdaq, really not much support here, which is concerning because you've already negated the little bit of support that you had there. And ultimately, it looks like you've kind of triggered this bear flag pattern by closing below that wick. So that's very concerning, something to keep an eye on. Bitcoin, amazing price action in Bitcoin. We dumped all of our crypto assets leading up into this rally. And then I issued a short to all the members this morning to short Bitcoin at 42,900. And look how close we got to picking the exact top on Bitcoin. And if you took the short with me, in a matter of a few hours, you're already up just over 5.5%. We were up over 6% there at some point, 7% actually, in a matter of a few hours. So it's beautiful to see. I caution people to protect that level, that short level, with a stop loss. You don't want to let this trade go against you. But ultimately, Bitcoin, again, same sort of bearish pattern. You have this bear flag pattern at bay, clear as day over here and over here. And now the question is, once you break it, I do think you have to head down to this channel here. That will be your big spot. Okay, down at the lower range of the channel. And what's concerning is that you did hammer off the complete reversal from the top to the bottom. You've tagged this trend line once again. And notice how you're actually traded below this wick here, and then it got bought back up so quickly. So this level of support, since you pierced it, you didn't close below it. Notice how you did not close below it. But on a closing basis, that's going to be the real trigger for the crypto market. A close below this yellow upsloping trend line is going to be pivotal. Notice here, you closed above, closed above, closed above on all this chop in here, closed above. So the close below this yellow trend line is going to be probably the breaking point for Bitcoin to start heading much lower on the chart. Again, you will have some support here that we will probably play for a bounce trade, but start looking again much lower. If you break that rising channel, I think you come back down to here to test this double bottom scenario around 32.95. I don't think you're going to have much support at this wick here, this 34,000. I think you're going to flush right into this one if this channel breaks. Okay, so keep that in mind. Beautiful short. I hope you were all able to quickly get in the game with me because Bitcoin reversed so quickly. I mean, just look at this intraday action. Amazing sell-off. And one other thing I want to bring to your attention is, let's just flip to the hourly chart. I was monitoring another channel. I love this channel analysis. It's so powerful. I was monitoring this channel here, and basically I was watching that channel because, oops, I got some craziness going on here. Just take that off. So I was watching this channel. This channel, if you remember, this was your bullish consolidation up into the Bitcoin conference area. And then you started flagging sideways. And the question was, were you going to break the low of this channel? And you certainly did. And that was the key trend that I was watching. Oh, I don't know why this thing is still on. Let me just get the right tool on so I'm not messing around in my video. But I was watching this channel because price action loves to retrace to where it was previously trading. So it was trading in this channel before breaking down, finding support, having a bounce, flagging sideways, having its mini bounce, and then look where it retraced to, almost the exact center point of this channel. And my lines might be off, give or take a few, dollars, but the fact that you had the resistance of this red bar high, I didn't think it was very likely to get through it. You also had a retrace back into this original downsloping channel that you were trading in for quite a few days, and now you broke down. So it was a beautiful short opportunity to execute. We also had limit orders open on Ethereum and Chainlink, but those did not get filled. I'm unfortunate. If had I known it was going to fall this fast, I would have just entered them in a little bit lower to get filled. But nonetheless, you can't win every single level, and there's no sense in chasing price action. We are in the money already on Bitcoin. And look, if we break this channel, I will most likely take profits on that short position at the lower end of this channel. So be ready for an alert. Crypto falls very fast and it gets bought up even faster. So you have to be on the lookout for that. Let's touch base on Tesla. So Tesla's price action has been this whipsaw price action, yo-yo price action, up and down, up and down. So here we had this sell-off yesterday, all day, sell-off, down roughly 5 to 6%. And then earnings were reported, stronger than expected earnings. They blew earnings out of the water and it rallied up over 10% at the high here. And then what proceeded to happen? Tesla started to sell off again. So Tesla kind of gave that gap up in the market, that extra momentum. And then as soon as Tesla started selling all day, it followed the trend of the overall market. And the reason why we shorted Tesla, we also issued a short level at 1,064, which you can see we're in the money nicely, over 55 bucks there, or $54. So we shorted Tesla. We were watching this price action. So as price action came up here, we were watching to see, first of all, you had this complete bearish engulfing candle at the high of this mini cycle. So that is one factor. Then you needed confirmation. Did you get a follow-through second candle close below this previous first candle? And we certainly did. So that was my trigger to pull the short on Tesla at 1,064 or 1,065, give or take a few pennies. And I issued that trade alert to all of you guys today. So I hope all of you members were able to take that Tesla short with me, as we are deep in the money on that trade already. As you can see on a daily basis, despite Tesla finishing up just over 3% on the day, it still had a major bearish reversal. This is not a good for a stock that's up 3% on the day and has a candle formation of this magnitude. not good. Because one of the reasons why is you were in this bearish, and I was chatting about this in the live day trade room, but you had this bearish consolidation, this bear flag pattern. Negate this big red candle. Let's say this price action didn't happen. But you had this mini bear flag pattern at bay, and it was looking like it was going to break until earnings saved it. And you popped up on earnings, but now you've reversed back into that bearish channel. So to me, this bearish flag is still in effect because you did not get a close above this bear flag high here. You actually had a reversal. And to me, the fact that you had such a major reversal in Tesla, it only points to the fact that this pattern is likely to break much, much lower. So where do I think the downside for Tesla is? Well, let's just take a look here for a quick second. Honestly, not too much support. Once you break this trend line here on Tesla, this yellow trend line, whoops, that's not right. Let me see that. So this yellow trend line is going to be your area of support. Whether you come into that today or tomorrow or the next day, it is a rising trend line. So that will be really your only area of support. It may coincide with bunch of these pivot close tops over here. But once you break that, there's not much really that's going to protect you other than this down sloping channel, parallel channel, and this major pivot low. I ultimately do think Tesla breaks this channel eventually, but until that is, it's going to act as a good support and resistance level. And you can see that we're well in the money on our short at 1,064, and I do think simply by this going to the bottom of the channel, that's a 32% collapse. So think about the profits that we could potentially make. And I do suspect we're going to head to this lower channel here and ultimately much lower from there. I think Tesla has a $400 or $500 stock in it. This is the big levels that I'm looking to accumulate in. 507 and this 411 range. If Tesla can get into there, it's probably one of the greatest buying opportunities. And I do think it has the potential to get down there. Once this cycle is complete, and potentially near the end of the year, I think Tesla could be hitting those levels, and people will be shocked. People would absolutely be shocked. But don't underestimate the power of a tightening cycle. Look what happened to Netflix, out of the woodwork, right? You think of a massive hedge fund that gets caught in a $400 million loss. You just hope they hedge to the downside with puts. Looking at gold stuck in this channel again. You had this nasty reversal candle. You have kind of these reversal candles all over the place that are in effect. You have this big red bar candle here. You have this topping tail here. You have this topping tail here. And now what's looking to me is that you have a couple different patterns that you need to be aware of. So the intermediate macro pattern is this bear flag that's forming. Okay, so that's the one bear flag that I see. Take those lines away, and then you have a secondary bear flag that's now forming in gold, which is this pattern. Okay, so you have one intermediate bear flag and one short-term bear flag. It just highlights the probabilities that this pattern does need to break lower and come down to our range, our buy range down here. That's where we'll be looking to accumulate gold, potentially in the 1867 area, just depending on how gold gets down there. If it's a straight dump or if it's a bearish consolidation lower, there's a couple factors that I have to pay attention to. But in and around this 1870 to the 1800 level will be an amazing opportunity to start accumulating gold for the long haul. And if you actually look at gold, let me just get rid of that line. If you actually look at gold on a bigger time frame, so I want to do the weekly chart, and we look at this topping tail here and this double top there, and we scroll all the way down to this previous similar cycle. Once again, you have a topping table on a weekly basis, and you have this double top area before gold flushed down, broke the arc. If the cycle resembles the one many decades ago, which history often doesn't repeat, but it often rhymes, then we could be potentially in for that famous flush out where you have your double top and you have a weekly topping tail. So if gold were to flush, that would definitely put us in this 1814 level, which we suspect will be the retrace, the final retrace back to this breakout zone here before gold starts making its next up leg. So wild price action. Again, be nimble. Don't go crazy on position sizing into earnings. Don't try to front run and guess which way a stock is going to go. Earnings tend to obliterate accounts. They can make or break accounts. And you certainly don't want it to break your account because you thought you had a hunch that it was going this way and it ended up going this way. So I truly love when these tech names are beaten down into earnings. It makes me more comfortable to hold them going into earnings because it's already priced in a bad earnings report. When a stock like Facebook has dumped down 21% in say 2 weeks, it makes me more confident to start accumulating and once again, just building up a core position of quality names. And certainly, stocks like Netflix, 70% down from the high, 50% for Facebook. These are blue chip names that have been decimated. PayPal, let's just look at PayPal's chart. I mean, PayPal ceases to amaze me. Oh my goodness, thank God we offloaded this. We unloaded our PayPal from the initial bounce around 117. Okay, that's when did we pick the exact top? No, we didn't. I mean, it got as high as 123, but we unloaded right in around here, 117. And then look what has happened. Now we're ready to buy PayPal again. We're eyeing. I mean, I think that has a little more downside. And notice how most of the stocks and indices are approaching that double bottom zone. Well, PayPal was kind of your first big blue chip stock, your large cap stock that was decimated on earnings and had this massive collapse. But if you look at how PayPal is now trading, it's been decimated from the highs over 300, now down to 89. Sub $100 is amazing. And we've actually almost negated the COVID low. So I do think you come to test that double bottom at some point. I don't know how long it's going to take, but the fact that you broke this major pivot low, it really signifies, I think PayPal could be a leading indicator as to where the rest of the stocks are going. So just like Facebook is at double bottom, it could possibly look to break. Just like the indices will slowly eventually start approaching double bottom, it could look to break lower. But nonetheless, I'll be starting to looking to accumulate PayPal around the 86.79 area and then eventually down to this 82 area. And obviously, I'll have plenty of room to maneuver and add to my position if it goes lower than those levels. But simply being able to buy this stock at these levels, and this is what we're starting to see in many of the names. This is a classic, bear market. When you start seeing most of the charts, having these phenomenal drops, that's how you know the indices are heading much lower, like the S&P, like the Nasdaq. It's just big cap tech, large cap, mega cap tech is going to have to be the one that breaks. So the likes of Amazon, Apple, Microsoft, Google, Tesla, they will have to be the ones that eventually break down before you start seeing the indices fall substantially. But it's amazing how crazy these drops have been. I mean, if we go to the monthly chart, look at the support line that we're approaching on PayPal. We've never had to hit this level of support. If we were to break this yellow trend line, this upsloping trend line, I'd be nervous if you're long PayPal because there's not really much support other than these pivot lows. But once you break these pivot lows here around 70, I mean, all this chop, there's not much support there. That's where you had an impulse move and you could potentially wipe all of those gains out. That would be pretty horrendous if that happened. But it could happen. It absolutely could happen. But nonetheless, you are approaching mega support. Major support. You would favor a bounce on a quality name like this, who still has massive revenues coming in, a good business model. But it is a tricky landscape for these fintech companies to navigate in with potentially more crypto regulation. Obviously, if cryptos fall, PayPal will fall. There's less crypto transactions, less fees. So it makes sense as to why PayPal's falling alongside like the cryptos. And when the economy slows down, these fintech companies obviously don't perform as well. And that's the thing you have to keep in mind, is they rely basically, most of the revenue is on transactions and taking a small amount of fees on every transaction, which accumulates to be a lot of money. But when the economy slows down, less transactions are happening. And ultimately, when they're also doing business, a large share of their business in crypto, if crypto enters a bear market, that will also hurt them directly. Okay, PayPal is one of the major platforms where you're able to withdraw your crypto, and I think you can buy Bitcoin now from PayPal as well, on their site. So, you know, if crypto enters a bear market, which we think we will, and it's certainly shaping up to be that way, then PayPal will take a hit. But nonetheless, you have to start accumulating these quality names at some point. I don't think PayPal is going out of business. You have to remember, this is Elon's one of his first babies. So do you really think he's going to let this one go? Even though he doesn't really have much tie to it, he still doesn't want to see one of his founding companies, you know, go under. But that's it for today. I hope this has been helpful. Again, earnings approaching. PayPal's got earnings April 27th, so that's next week. Again, when a name is completely beaten down into earnings, it makes me more confident to buy it, and that's certainly what we've seen. You know, when you think about PayPal was trading up here on April 5th, pretty much the beginning of the month, and now it's down 27%. I hope people weren't getting long in this area. I mean, this is where we dumped our 117 mark, and now look at it. The fact that we dumped it a couple weeks ago, and now we can rebuy it at a lower price, that is the beautiful thing about trading, is knowing the levels, buying the levels, shorting the levels, and rinsing and repeating, and just trusting the overall process, inching in, accumulating, not going crazy on any one position, and just using the risk management principle to mitigate any potential losses. Okay, but when you're buying companies that are down 70, 80, 90% from the high, the risk to reward ratio is certainly in your favor. All right, everybody, take care. Enjoy your night. Stay tuned for more updates. It should be a